It is November 15th. Your boy Gary here. I had a great time yesterday. If there is someone out there from the church yesterday, I went to get a free cholesterol screening from this company. I will put the link in the newsletter if you wanted to test it out. As someone who is not employed, I have to go through the healthcare exchange for my insurance. I have a $9,000 deductible. Insurance in this company is a effing joke. $9,000 deductible. It cost me like $7,000 a year for this insurance. So I can't pay a damn thing. Also, I can't contribute to an HSA because that would have been a $9,000 a year. They charge you more if you can donate to an HSA. It sucks. It sucks. So when I saw an ad for a free cholesterol screening, I said, you know what? I'm going to go get it. So I went and got it. In fact, the bonus was they gave me a $45 gift card. So I liked it. I liked it. The team there, shout out to the folks in the church. If you're subscribed or you're listening today, shout out to you guys. You guys were fantastic. I gave you 5 stars. If they would have let me comment, I probably would have given you shout outs as well. But you can play this for your bosses. Play this little clip for your bosses. Yes, I was there. One other good news that I got yesterday, I'm a top 50 podcaster in Spotify. I have no idea. Top business podcast. These guys constantly just tell me, hey, can we talk to your team? I'm like, I am the team. I am the team. I was top 50 in investing according last month. Now I'm top 50 this month in business. So thank you to the listeners. Thank you to everybody. I looked and there are teams and I can tell there are business podcasts that have teams that are below me. I have no idea how the hell I got that big, but I thank you guys for that. Now, it's Friday, so we keep recap Friday. But remember, and I'm going to bring this up, you've got 2 days left to save up to 71% on Trendspider. 2 days left. So if you want to do it today, you got the whole weekend to set yourself up. You could literally, if you sign up for the advanced tier, you could set up a one-on-one training for yourself over the weekend and get everything set up, get my 4-hour algorithms, everything that you need. I'm not going to mention again. If you want to see the thing, you can email me and ask me questions about Trendspider. I would email and ask Trendspider themselves about questions. But if you have any questions, feel free to ask me. The process is very simple. You go to Linktree. You can see the link down below, linktr.ee/dailystockpick, and it's the top link. It'll take you over here. Sign up for one of these. There is a free 7-day trial. Okay, you're going to pay more if you take the 7-day trial, but where you see log in to change your plan, that's going to say free 7-day trial. And the difference is huge, okay? The standard, if you know what you're doing and you're fine with, technicals and you know everything and you're fine setting up yourself, take the standard. For $4 more a month, I would get the enhanced because this comes with one free one-on-one session. And they can help you set your system up. They can show you where to go to put your moving averages in. They can show you where to go to put your Bollinger Bands, your MACD, and they can show you certain things about the actual platform. That's the benefit of that one. Now, if you're brand new to everything, for $15 more per month, go to the advanced. That has unlimited one-on-one training. You can learn how to become an expert in this tool. And where are you going to get an unlimited one-on-one training in technical stock services for $700 per year? Okay, and then once you're done, you can go down to the other tier. But Trendspider, it is by far the best service that I have to offer. It is the service, if there's one service out there that I would tell you to get, it would be that. The second one, Seeking Alpha and Alpha Picks, they are complementary to the service, and I think they help you find stocks. But to manage your portfolio in a technical sense, these charts are priceless to me. So it's Friday. We recap. One thing I did want to point out. I got a question yesterday about international stocks, and we know that BABA reported, and I'm not going to go over BABA, but FYI, I looked at the Trump administration last time, and the S&P was up 50% during his first term. Okay, the 4 years, it was up 50%. The rest of the world was up 25%. So I would urge you during the Trump administration that you go out there and do that. Now, today, there's $2.9 trillion of options expire. This is going to be very volatile. So what do I expect to see today? I expect to see the VIX spike a little bit. It is up 2.52% right now. The market is down in pre-market. I expect that to go up. I talked about yesterday how you can tell if the market's going to be up or down. You can look at the VIX. You can look at CNN Fear and Greed Index. And you can look at the Qs. And you can see, and I said it yesterday, and again, a major breakout retest is on the horizon for the NASDAQ. QQQ 503 is the area to hold. That's what Trendspider says. I think they're reading my newsletter. Because what is this yellow line been in? 503. Now, what am I seeing here? I'm seeing that the 9-day is curling over. The Bollinger Bands have expanded. They need to contract. The price action is below the 9-day in the afternoon. We are down 0.87. We're at 504. You're close to this line. I don't think that this needs to hold exactly because you do have a gap down here to 493. But I would argue, Piper Sandler says it as well. Buy the dip. Okay? Buy the dip. Piper Sandler said the street, they put out their price target right down here. Provided the street with its 2024 and 2025 year-end targets. 6,100 for the 2024 and 2025, 6,600. The 2024 price target is only 1.9%. While the 2025 target implies a 10% move. Remember, the average is between 8 and 10%. So these guys aren't taking a huge leap and saying we're going to soar next year. If things go well, you'll see them start to take that up. If things go poorly, you'll see them start to take it down. So you want to be ready for this. But again, I would argue with this chart, you want to take a look at the 4-hour. And then I would go and take a look at the weekly. Where are we on the weekly? Look at how the last few times where we've been up here, how it's pulled back. And we're up above the 9-day. So for the long term, I think you're fine buying. For the short term, we might need a little bit of pullback. But don't wait for it, because the longer you wait for it, the more likely it is to take off. And that's the key is if for something like the Qs, you want to take a look at the chart and you want to find entries. My 4-hour algorithm is a perfect tool, because while the 4-hour algorithm makes you 79% over the last 2 years, buying and holding makes you 90%. So take the entries as a guide to try and get in. But just take the entries and you'll be up 90%. The official entry was 24.5 months ago, and you're up 90%. If you would have bought these dips and you're just dollar costing average your way in, it's even better. So I like this. That's the approach that I like. Blah, blah, blah. I think that we see a small pullback. I like that particular chart from Trendspider. So the biggest movers of the day. Applied Materials, Domino's Pizza, and ASTS and more. Highland Holdings gained 6%. Palantir, we'll go over. UAVS was up 122% yesterday. That's a pandemic stock. We're going to go over Buffett. We're going to go over Palantir. We're going to go over Domino's. I won't go over Applied Materials, but just note it did drop. There's questions about semiconductors, their equipment being sold. ASTS tumbled 15%. This is the one that's providing space connectivity to AT&T. And by the way, I did listen to the audio. The audio was much better yesterday, so I'm happy with the guidance of this. The maturity of this M4 Pro Mac. It's getting there, and I'm getting better at it. But those are the big movers of the day. One other thing, ZETA. ZETA we talked about. ZETA, this is the seeking out. This is Alpha Picks. Okay, ZETA is in Alpha Picks. We've talked about it. It was in the core portfolio. Their portfolio. It tumbled down, and then there was assumption that hey, they tumbled down. It's up 14% in the pre-market, and essentially what Steve Kress said was, hey, the short report seller, They're not. They have tons of short reports, and they typically take it down just to benefit themselves. Now, understand that GCT was one that Alpha Picks picked. They also picked, I think it was SMCI, had a short report on it as well. And SMCI may get delisted. But this is an Alpha Pick. And so it's 1% of your portfolio because it was recently picked. I think it was September or something. It was up a lot. Year to date, this one's up 96%. It was up 200%. So if you're looking at this one, the quant has it as a hold. Doesn't mean you don't buy it. Okay, Wall Street, there are 14 analysts that cover this. They haven't brought their price target down. They're at 38. That's 119%. So yes, 119% gain if it reaches back to there. Now, there's questions about this because the questions are, was this an election campaign, blah, blah, blah. If you want more analysis of this, get Alpha Picks, and you can get $50 off, by, again, Linktree. If you want just Alpha Picks, you can get that. I would urge you, the bundle, Premium and Alpha Picks, it gets you the best of both worlds because you can get the quant. We'll go over, you get an email, you import your portfolio, and I'll go over the daily stock pick core portfolio. I had 3 stocks that were downgraded yesterday. You also get Alpha Picks. And what's the great thing about Alpha Picks? Well, it's picks on the 1st and the 15th. We're going to get a new Alpha Pick today. And I'm going to go in there and I'm going to buy 1% in my account. I'm going to buy 1% in my parents' account. And we're going to spend money and we're going to buy it. The great thing about it is it's 1 stock on the 1st, 1 stock on the 15th. Since its inception, it's up 183%. During the same time period, the S&P is up 58%. You want a portfolio that just beats the S&P. Okay, so even if you were to make 60% by trading yourself, what's the time that you put in versus just buying on the 1st and buying on the 15th, and they tell you when to sell. They tell you when to sell. So managing that portfolio, again, if you want to go and watch it, there's a YouTube video. There is on the dailystockpick.substack.com, my newsletter. You can go and look at the newsletter. That it is 100% just an easy one. We're going to get another one. I'm going to buy it today. And so if you want the bundle, you can get it. You save $159 using the bundle. If you want just Alpha Picks, hey, I just want this portfolio because it's done so well. And yes, I'm up like 10% since I bought October 25th in this portfolio. If you just want it, it's 100, you can get $50 off there. But ZETA is one. It's up 14%. It's up 15% as we speak. That's one that I like. And if you wanted to just build your own portfolio, we're going to go over this because XLK, this is the core portfolio. I get an email every morning that says, hey, these are the stocks in your core portfolio. And if you want to follow the core portfolio, you can do that for free. It's down here on Savvy Trader. It's all on Linktree. Savvy Trader, you can follow it for free. 35 names because I added IBIT. And you can look at it. Total, look at all that green. Okay, we can compare this against the S&P. I would never manage a portfolio this way, but look at that. Year to date, I mean, we can go up 1 year. I'm beating SPY. What over this, the core portfolio is up 44%. SPY over 1 year is up 32%. The max since I started this portfolio, daily stock pick core portfolio is up 52%. SPY is up 36%. So yes, I do pretty well in stock picking. But if you want to look at these stocks, let's look at this. This is XLK. XLK in the quant, it went from a buy to a hold. So when it opens up today, it's going to go to a hold. So you get these alerts. Microsoft went from a strong buy all the way down to a hold. And I don't understand it. Again, this is the quant. So there's 5 factors in the quant. There's valuation, growth, profitability, momentum, and revisions, okay? You can look at the grades of each within this. Microsoft goes down to a hold. Wall Street still says it's a strong buy. I would argue that $504 price target, I think you're getting there at some point. Just the earnings have to catch up to it. And they have to stop spending some. But again, does Trump hate Microsoft? No. He doesn't hate Microsoft. He doesn't hate Apple. He hates Meta. And Meta got downgraded to a hold. This went from strong buy to a hold. Wall Street still says it's a strong buy with a $648 price target. Have they brought it down? No. And so Meta was down, let's say 0.49%. Get it under 600. Has it gone to 600? Yep. 52 week, it went to 602. So you can see the only reason it's a hold is because of the valuation. Everything else in this is an A. The valuation's a little bit stretched. So now let's talk about Apple, because Apple was up yesterday about 1%. Let me see what it was. Let's go in here and look. And I always say Apple, trading at 30 times forward earnings, that's tough with growth of 2%. That's a tough pill to swallow for me. But Apple was up 1.38%. You got a dividend yesterday. And I think because this is the largest stock holding, and I think a lot of people hold this, and I think on dividend days when it's paid, this is the ex-dividend date that you're seeing on the chart here, okay? You have to hold the stock on the ex-dividend date in order to get the dividend. But the dividends were paid yesterday. And what happened? Well, most people like me probably reinvest their dividends. And so when you reinvest your dividends, you're going to see a lot of buying. And so I think that the move up yesterday, it's the morning candle, 1.51%. The afternoon candle was down 0.12. I think that's what you saw, is just reinvestment of dividends. I got a sweet 5-figure dividend. It's every quarter I get it just because I have so much of that. Now, Tesla was down yesterday. There was a report that the $7,500 tax rebate is going to be gone. Tesla's not really affected. I think they're less affected just because I think the cars are a secondary thing. It's really the robo-taxi and the full self-driving that's driving this. I would tell you, if you can get this under $300, it's at $311. If you can get this under $300, get it. I think the valuation makes no sense. It has never made sense. I don't think that they are anywhere close to having the robo-taxi available. I don't think that full self-driving will see the light of day on local roads, but I do think that Trump will allow it on federal highways, and I think they're going to push that type of thing through. And so I think this one, I think you've got some catalysts behind it. Now, when you look at this weekly, the MACD's just starting to take off. You're trading up top of the Bollinger Bands. That's how strong this election Elon Musk has been during the election. It pushed it above the Bollinger Bands. You haven't been there since June of 2023. Well, robo-taxi, July of this year, it kind of popped up there. But again, you've got a positive moving 50-day that dipped down. You got a positive moving 200-day on this weekly. And I think you start to see this one move. But I don't think it's going to be quick. I think it's going to be slow and steady. So I think if you can get this under 300, you get it. The way I'm invested in Tesla is XLY. And XLY, I think that is my safety because it's Amazon and it's Tesla. If we just go over to Seeking Alpha and we put in XLY and we say, okay, what are the holdings on this one? You'll see it's Tesla and Amazon. Tesla and Amazon represent 40% of this ETF. And then there's 51 other names, including Home Depot, Booking Holdings, McDonald's, Lowe's, TJX. This is the consumer discretionary. I like this ETF, and I like it going forward. The Quant says it's a buy. Momentum, A+. Look, 1 month return, 9%. 6 month, 20%. 1 year, 29%. It's pretty good. That's pretty good. So that's the way I hold that one. Now, let's talk about this one, Amazon. Not only did Lilly and Novo Nordisk go after HIMSS, Amazon dropped yesterday, hey, we're getting into telehealth and we're going to do compounding pharmacy. HIMSS dropped. HIMSS dropped 17%. I think by the end of the day, it was down 22%. It's up 3%. There was I was on Spaces yesterday. Those fucking dudes love boner pills. I can't stand talking about this company. It's boner pills. That's what it is. I mean, you could talk about hers, But HIMSS is what drives this. It's boner pills, and it's the compounded pharmacy. And I just don't see how HIMSS continues to function even when Amazon is going to undercut you, and Amazon has all of that power behind them. I just don't get it. I don't get it. I don't understand it. But I wanted to bring this up because you're seeing not only did Lilly and Novo say, hey, our supply is good and we can meet demand, and then HIMSS had to launch a tracker to say, no, you can't meet demand, and they're presenting that to the FDA. And then Amazon comes in and says, hey, hold my beer. We're going to do this. That's the deal. So it's a little bit dangerous. I'd say if you want to go into a small cap, because make no mistake, this is a small cap company. PSIX was up 4% yesterday. This is the one that just pulled back from 35 and it's trading at 29. Okay, it's a strong buy in the quant. I don't know much about it, but you can't argue with this chart. And PSIX, if we go and look at this chart, these lines are all off of weekly. Now, I would say that 26 provides you some support. So if you buy at 29, just put in your stop loss at 26, because if it breaks that, then you could probably go down to about 20. And you just buy again. But we've got a positive moving 50-day, we got a positive moving 200-day, and the next level of support is probably about 50. So if you want a smaller company, go and research PSIX. It's only $676 million. Okay? Your McDonald's down the street, that makes more revenue than this. Not McDonald's as a whole. McDonald's down the street, just that one. Okay? We talked about the EV shocker. How in the world was anybody buying Rivian before this came out? Rivian was down 10%. Okay? I actually don't think that GM and Ford, I think these three companies, Tesla, GM, and Ford, I think they're all fine. They were down yesterday. Tesla was down 5%. GM was down 0.16 and Ford was down marginally. I think Ford and GM save money. Trump's not going to force them into the EV stuff. You know, it's clear that Ford and General Motors are car companies where people want gas-powered hybrids. They don't want just the EV. They want gas-powered hybrids. And if you're buying a Tesla, you want an EV. You don't want to go to Ford and GM for those kinds of cars. I don't know who's buying those damn cars, but you don't want to go to Ford and GM for those cars. You want to go to Tesla. So I don't think that the $7,500 kills Tesla because, again, their margins are pretty good. Is it going to hurt them? I don't know, because what they're going to do this year, I think what you're going to see in Q4 here is a shit ton of people go and buy Teslas because, again, they're going to want to sell that inventory that they've got, and they're going to basically pump up. You can save $7,500. And so I think Tesla's probably a pretty good buy here till the end of the year. Just my thought. Palantir. Palantir announces transfer of stock exchange listing to the NASDAQ. They're going to the Qs. This pumped the stock up. Yesterday it was down 2.53%. This was announced yesterday at 412. The stock is up another 2%. It's back to where it was. It's over 60. I don't know that I necessarily buy this, but I'm pretty happy that now I have exposure to it in the Qs because I own a large amount of Qs. So we're going to look at a chart because next week is NVIDIA earnings, and look at the chart here. So this chart, what it shows you, this is a daily candle chart of SMH. Okay, the Bollinger Bands, those I think those are Bollinger Bands. No, these are probably just moving averages. To be honest with you, they might be smart Bollinger Bands. BBW, yeah, these are smart Bollinger Bands. Is it ready for a Is it ready for a pop? This is the most compressed semiconductors have been since April. Since April. Okay? Let's look at the chart of SMH and let's see where we're going, because this is all the semis and we can look at this. It's just been kind of trading sideways. We haven't gone up. You know, you haven't traded this way for a while. Look at that weekly. You've just traded sideways. Completely sideways. I don't even see, the only time that I see something like this was July of 2023. And what happened afterwards? You went from 141 all the way up to 270. This is a semiconductor index. Okay, so let's take a look at NVIDIA because you are 1 week away. I said, I don't know that you're ever going to get the chance to buy NVIDIA under 140 again. Well, I don't think you will. It's at 145. It's down 1%. If you're going to buy something on a Friday, I don't think this is a bad buy. Because if we look at NVIDIA and we just go to NVIDIA and we look at it in the quant, there was a lot of talk about the quant move to a hold. The only reason it moved to a hold is because of the valuation and revisions. Now, revisions, we can go and look at that. Over the last 90 days, 40 analysts have taken their earnings per share up, 7 down. Revenue, 46 up, 4 down. When you go and you look at the ratings and we go and look at the Wall Street, their price target is 158. We've talked about how they're taking their price target up. Is it realistic to think that this could reach 158? Look at that little bit. Okay, we can take a look at the last 3 months. Look, ever since the beginning of November when it was 150, we're up at 157.76. I think it goes to 158, yeah. It's 158.52 today because I think there were more upgrades. So the analyst revisions, yeah. So I don't think that this one's in danger of dropping, but look at what happened last earnings, okay? This is the earnings from June, and it went up, and it hit that 140, and then rejected off, and you had the chance to buy at 100. Do I expect this same kind of thing? I don't think so. Stranger things have happened. This MACD is significantly lower than it was, okay, heading into this earnings. The RSI is at 58. When we look at the weekly here, yeah, you've still got strength. Yes, the MACD reset itself. It's not up at 16 like it was when it was selling at what, 128? The RSI is back down to reasonable levels at 65. And we all know that these hyperscalers are buying a ton of stuff. So do I expect it to bounce? I'd expect a little bit, but I think you buy this for the long term. And I think you sit there and you just buy it at around 140. And you know, say you have $1,000 and you want to put it into NVIDIA, buy $100 today. It's at 145. Then on Monday, you buy another $100. And then on Tuesday, you maybe buy another $100. And then when I think their earnings are Thursday, if I'm not mistaken, let's go over and look at Earnings Hub real quick, because that's going to be when you want, you know, again, you're going to want to see the reaction to earnings. Let's go next week. We're going to take that out. Next week, NVIDIA is on Wednesday after the bell. Expected 74 cents per share. Earnings per share last time they released 68 cents per share. Revenue, 32 billion. Revenue last time was 28 billion. So they're expected to grow. Again, they're expected to grow. So I like that one. Let's talk about Warren Buffett. This is going to be the thumbnail, by the way. I'm going to put the thumbnail up on YouTube. I did Kathy Lee and I did Tom Lee and Kathy Woods. We're going to do Buffett. It'll be 3 for 3 for the week. But he's going to be on the thumbnail. He bought Domino's Pizza. Domino's Pizza. And Pool. Pool. And he got out of Floor and Decor. I mean, he's getting out of Floor and Decor, but he's adding Domino's Pizza. Domino's Pizza soared. You had a God candle on this one. We can look at the after hours on this. I'm going to go to a 5-minute chart in the after hours. Look. I mean, that was the candle. You got all the way up to 518. 518 you got up to. And you've settled back down. Are you buying Domino's Pizza because Warren Buffett's in it? I would argue, just buy freaking Berkshire. Okay? Berkshire, I made this mistake with Occidental Petroleum and other ones with him. But honestly, just buy freaking Berkshire. If you're going to follow Warren Buffett, just buy Berkshire. You can trade around Domino's Pizza, but just buy Berkshire. I'm in at Berkshire at this all-time high at like 480. I bought Berkshire. Am I worried? Nope. Bottom left, upper right. I'm just going to hold. I'll add more when the algorithm tells me to add more. In fact, it didn't. Yeah, 467. I think I bought a little bit more there. It wasn't much, but we're talking probably 10 shares. It's not much. I don't hold a lot of Berkshire. I hold way more QQQ than that. Now, RFK. He was put in front, nominated for the Food and Drug Administration, I think. Psychedelic stocks went crazy. Okay, you can see ATAI up 10%, IXHL 5%, and then vaccine stocks just freaking tanked. So there's a list of them in here. I'm not going to follow them. You guys remember the one that kind of soared the other day was drug. This is an epilepsy drug. I wanted to make sure that you knew the algorithm got you out with a 2,398% gain. And how long did it take you to make that 2,900? It took you all of 28 days. So had you put $1 into this, you would have made, 2,398%. Bought one share of it, you would have had $43. It is what it is. But again, this is the type of thing that will take that one nuts and make it go crazy. But RFK was nominated for the true degenerates out there that want to invest in companies that just don't make money. UAVS. This was a COVID stock. I think it was June or July. We can go and look at the chart. But UAVS is a COVID stock that was traded heavily with rumors of Amazon using their drone service. They got a securing 17 new purchase orders from EB-TAC drones. 17 new purchase orders. Well, let's look at the financials of this one, because it's got to be, it's not making money. It's down 20% year over year on growth. Profitability, gross profit margin 43%. Momentum, it's down 81%. It's down 90%. If you want to trade UAV, you can trade UAVS. Now, when you look at this and we go back to a monthly, we're going to go back to the COVID times here, because 2020, you can see this one, 2020, when we got to COVID, March of 2020, it was trading for about $416. Sounds expensive, right? It got to $14,000 during that time. This was a crazy, crazy time. Since then, no, I wouldn't touch it. But it was up, yesterday? Let's see. It was up 122%. So for the true degenerates, there are stocks out there like that. Have at them. We welcome back Joe, because it's outside of fishing season. And Joe says fishing season is finally done. He lives up in the upper Northwest. And in fact, if I ever go up there, Joe, you owe me some salmon. Not only do we need to go over... But OGN, they've been quietly gobbling up smaller companies, high dividend at 7%. This is pretty safe and a super low PE around 4. Seeking Alpha just had an article on it for big upside potential. Organon and company. Now, it's going down. Algorithm loses you 5%, but buying and holding loses you 34%. We can go and look at this. This is a bottom left, upper right that seems to have gotten the 50-day moving positive and is now trading on the bottom side. So OGN, let's see. Let's go over to Seeking Alpha and look at this one. I think this is one that, the Quant has it as a hold. The valuation's super low. I mean, Joe's right, 3.74, and with a PEG ratio of 0.03. Let me just look at the market cap real quick. Market cap is $3.94 billion. So let's see. Are they a food company? Delivers health solutions through a portfolio of prescription therapies and medical devices within women's health. So this one's interesting. Growth is a D. Let's see. They're growing their revenue growth 4%. Yeah, the growth looks horrible, but their profitability looks really good. Return on total assets, 10%. I mean, when the sector's losing 19% or 26%, that's great. Profitability, fantastic. Momentum, it has sucked. Revisions, there are 6 that took their earnings per share down. I would probably wait for this one to get, let's see what Wall Street, how many analysts cover it? 9. And they have a price target of $22 on it. I would probably, I mean, the 4-hour algorithm doesn't make you money. Let's see if the 65-minute algorithm makes you money on this one. No. Joe, I'd probably, for me, again, Joe is a much more risky investor than I am. That death cross has been there. I'd probably wait till you get to the 50-day. Honestly, you can take a look at this last one. When the 50-day started moving positive and you got up above there at 11, I think I'd use the 50-day as your guide. When it starts trading over that 50-day, maybe that's the time you look at getting in there. I think that might be a better strategy for me. But Joe, I know you're going to go into it. I know you're going to find a strategy for it. Kudos to you. Welcome back. Dexter from Spotify. What are your thoughts on AMD? I wrote back to Dexter. I don't like it as much as NVIDIA, but I'll add it and I'll look at it. AMD, I held. I am out of this one. I don't own it anymore. I think I sold up here at like 180 something. I didn't get the top here at 200. I sold it about 180, 160, somewhere around there. I bought it like 100. So yeah, I do like AMD. I just don't think you can compete with NVIDIA. And we can look at it. The valuation is a little bit stretched as far as I'm concerned. Now, the valuation is a C. Again, NVIDIA's still a good value. This is 41 times forward earnings. But your PEG, if you do grow, it's at 0.99. So the growth is fantastic. 9% revenue growth year over year. Your levered free cash flow, you're losing 19%. That's where you kind of lose me a little bit. Profitability, gross profit margin 52%. I mean, let's just look at AMD versus NVIDIA. And we're not going to do Texas Instruments, Qualcomm, ARM, Micron. We're just going to do NVIDIA. Because the only one that I really care about is NVIDIA. The NVIDIA is the only chip that I currently own. And there's a reason it's just got so much. The problem with NVIDIA is the market cap's going to take it. And you can see right here, price return over 1 year. Look at NVIDIA, 195. I mean, we can even take this in. 6 months, AMD is down 9%. NVIDIA's up 60%. Even a week, AMD's down 5%. So NVIDIA, Wall Street analysts say it's a buy. NVIDIA is a strong buy. It's a hold in the quant. Both of them are holds. Valuation grades, look, NVIDIA is an F, but as long as they continue to grow, that everything else is an A. And you can see there's a little bit of factor grades on the quant there. Let's go. The return we talked about. Now, dividend, NVIDIA has a meaningless dividend. It means nothing. Let's look at the PE. NVIDIA, a little bit more expensive, even going forward. The PEG ratio, it's about the same. And honestly, I think NVIDIA has so much for the next year. I'm not saying for the long term, 5 to 10 years. I'm saying NVIDIA has such a lead that I think they can continue to do it. Because look at the revenue growth. AMD year over year, 9%. NVIDIA, 194%. Profitability, AMD, gross profit margin, 52%. NVIDIA, 75%. I'd rather invest in the number one than the number two in this. And look at the short interest. AMD 2.2, double what it. Nobody's shorting NVIDIA. Nobody's crazy enough to short it. So again, which one do I like? I like NVIDIA. You could trade AMD all that you want, but I would absolutely take NVIDIA over AMD. So there's my thoughts on it. Titus, Micron, same thing. I mean, same thing. We can go back and we can, let's see, where did I have that chart? Yeah. AMD, let's put in Micron because it's super, super similar. Micron is the same kind of stuff. Let's compare it. It's a buy, it's a strong buy. Not bad. Your valuation, A+, A+, A+. I will show you what the problem with Micron is. Last close, we can look at the 1 month return. It's down 8%, all of that stuff. Dividend yield, Micron has a meaningless dividend. And then you can see the PE ratio. Boy, Micron looks good. It looks fantastic. Then you get to the PEG ratio. It's 0.22. I'm sorry, PEG forward. Yeah, 0.22. That's really good. Then you get to the growth. Revenue growth year over year, 61%, looks better than AMD. Then you get to the profitability, 22% gross profit margin. Okay? That's your problem. Your problem with Micron is basically it's the actual financials. So when you go and you look at the profitability, 22%, you go and look at the valuation, they're not currently making money. They're not currently making a profit. So you look at that PE going forward, they're expected to make money, but they just haven't been managed appropriately. So which one do I like of those three? It's NVIDIA. Honestly, I mean, Dex and Titus from Spotify, you guys can bottom feed all you want, but in my mind, I think you want to just buy NVIDIA. That's it. Jack from Twitter, he says, I'm predicting IGIC will be alpha picks within 2 months. IGIC. Boy, there's a lot of people who love to predict these things. International General Insurance Holdings. That looks really good. $1 billion market cap. So it's a small cap. It's ranked number 4 out of 50. Wow. 1 year, it's up 123%. Year to date, it's up 94%. Let's see, Wall Street, there's one analyst that covers it, so take it with a grain of salt. Their price target is 26. If we go and we look at their valuation, super low PE. If we go and look at their growth, 10% year over year. We look at their profitability. That's where you kind of lose me a little bit. Gross profit margins, 41%. Sector's growing at 51. We can go, it's number 4 out of 50. What's the number one? KNIS. This one has a $124 million. I mean, come on. It's a $124 million market cap. You can trade that one all you want. Root is one that I've heard of before. I think they might have been in my one of my things. Ranked 2 out of 10, or somebody asked me about it. I forget. Valuation, it's a strong buy in the quant. Valuation, we can, let's see, Root versus, we're going to edit symbols. We're going to take a look at Root versus IGIC, International General Insurance. So we're going to take a look at, come on, IGIC. Okay, compare. Oh, why is it doing that? Okay, there we go. Compare those two. So Root, over 1 year, you can see how much Root has outperformed. IGIC has a better seeking alpha analyst score. The valuation quant, B+, you can see this last close, 1 month return. Root is 86%. IGIC is that. Safety, the dividend, it means nothing. Revenue growth, Root is up 215%. IGIC up 10%. Gross profit margin, 36% for Root. IGIC. Root, I think, is the company that's doing insurance through their app. And I think that's the big one. And I think I may have seen this one somewhere. I forget exactly. Oh, on first ever net income profit, that's where it was. It was the 175% gain that this one made. So I think they're both interesting. I mean, insurance, you can't go wrong with insurance, right? Let's talk about scans. Scans in the 4-hour algorithm. Uber, $72.14 buy. Okay, $71.89 is where it's trading at right now. MACD, super low. I mean, this one gets no love whatsoever right now. Their earnings have passed. Ever since their earnings, they gapped down and then they've been down. Would I buy this one here right now? No. I want to wait until that 9-day starts turning positive. Frog in our watch list. This is the database. This is JFrog Limited. This is $29.80. Where are you trading at right now? 31. It just got another entry. So remember how I showed MicroStrategy? I can show you MicroStrategy real quick. How it tells you to actually buy as you're going up if you have an alert set up. Well, JFrog just got another buy in here. So let me put in JFrog. JFrog right here. We're filling that gap up to 33. So 31, maybe make about 10% or so if you're filling that gap. You're trading on the up day. It's kind of consolidated after its earnings. Doesn't really have a catalyst to go up there, but we can look at JFrog here in Seeking Alpha, and we can see it's a hold in the quant. Wall Street says it's buy, $36 price target, 19 analysts to cover it. Have they chased it down? Yep, you bet. But recently, after the earnings, they brought it back up. So look at that one. UPS in the the 4-hour algorithm. It has I wouldn't touch this one, to be honest with you. I mean, we can look at this one. That's just a chart that I don't want any part of until that 50-day starts turning positive, to be honest with you. And then there's a whole bunch of leveraged ETFs. SQQQ. We talked about how the Qs may need to take a break. Well, SQQQ is the triple leverage ETF for short. It's up 3% in pre-market, 32.68. Remember, these are decaying assets, and I wouldn't buy a triple leveraged ETF on Friday unless I'm going to sell on a Friday. So if you want to trade this in the 5-minute, just look for confirmation. You can see in the after hours. Let's see. Yeah, you've got all the confirmation in the world. You're up above that 9-day. Your MACD down below here. Your RSI completely overbought at 73. So on a 5-minute, you might see this one start to pull back. But those Bollinger Bands were super tight here at 33. Could have added 33.49, scalped. It's typically what you do with these kind of things. So there's a bunch of other triple leveraged ETFs. Again, remember, there are 3 tools. And Trendspider, I am not going to have another podcast other than for the paid newsletter folks tomorrow. But you will have, the sale ends on Sunday. So if you're going to get Trendspider, you already missed the 75%. Do not miss this 71% because it goes down again next week. So, and then you've got 65%, and then you're paying regular price. So if you come to me in December and say, hey, Gary, can I get that Trendspider deal? No, you had the whole month of November, but it continues to go down. Again, I urge people, the advanced tier for $777, it's $64 a month. It is only $15 more a month, but you can schedule unlimited one-on-one training. It's right there on your screen, unlimited one-on-one training. The enhanced, just get this one. It's only like $40 more than the standard, but it comes with that free one-on-one session, and that's going to help you set your service up. But I would urge you, if you're not used to charting, if you're not used to setting things up, go to the unlimited one. If you have any questions, hit me up. I will talk to you guys on Monday. See ya.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.